Okay, it's Tuesday the 6th of December and I'm on the Ftse 100. First thing is for this live trade, it might be relatively short in the trade because it's coming up toward my stop now at 51.3. If it reaches that level, I will exit this trade for a loss. Okay, so what am I looking at with this trade and what's the reasoning for the trade? Well, first thing is, as always, with the live trades now, if you want to see the morning analysis of the market, the reasoning for setting up the zones, the reasoning for the trades I was looking at, just watch the review video of the same date. Now, this zone right here at the sort of 750 level, this morning I was very interested in this area for both longs and shorts, depending on how the market's set up. It's in a very key area currently of support and resistance. Now, this morning, the market sold off very, very strongly down into the 720 area. For me, there was no real concrete reason to get into this short position. For that reason, I just stayed out of the market as it sold off. It's much more important to follow your trading plan rather than jump into an individual trade. So, as a trader, you are going to miss countless market moves, countless very large market moves, countless market moves where you have a very, very strong opinion of what is going to happen in the market, but the things just don't line up with your trading plan to get you into that trade. The reason it's so important to not jump into the trade is because your trading plan is what turns you into a successful trader. So your trading plan is what's going to make you profitable at the end of a month, at the end of 6 months, and at the end of a year. It doesn't matter what happens on an individual trade. What matters is overall how you do as a trader. So you need to be profitable, first of all, to be a trader, and your trading plan is what is going to do that. Well, you following the trading plan is what is going to do that. The trading plan has to be profitable, obviously, and then it becomes your implementation of that plan. So the market sold off, it then paused, and it pushed back up into this area as resistance. For me, I was happy to get in after this 9:35 a.m. pin bar, looking to take the market back down. Now, this area down here, where the market has previously stalled, is a management point. So this, because of the way the market has reacted down here, if/when the market comes down here, this is where I would expect to see reactions coming into the market. So bulls stepping back in, basically. So this is where I want to start paying closer attention to the trade, making decisions based around price action on whether to stay in the trade or to exit the trade. The target is down toward these levels down here, at the previous lows, basically. So right here. As mentioned, I've entered after this 9:35 a.m. candle. The market has just spiked down just a little bit, and then it has pushed back up again. So basically it's reacted off of the very top of this pin right here. For me, looking at this, after this move, after this stall, I was happy to get into the short, watching slightly lower at these levels right here. So we will see how this trade turns out. As always, what I always do is I take the trade on the day of the live review videos, and then I just post the trade however it works out, win, loss, break, even. I think it's really important to do that because too many people gloss over losses in trading. Losses in trading, it's impossible to avoid losses in trading. It's all part of trading. Traders who stand next to, mansions and lots of houses, or mansions and lots of cars, things like that, when they're talking about um, how they're great traders and how they can make you a great trader, they never show you the losses. They just show you the wins. Look at this trade. I made $5,000, $10,000. But what's a lot more important when you're a trader, and certainly when you're learning to trade, is understanding that losing is okay, because it's impossible to be a trader without losing. Um, your trading plan is going to tell you how often you're going to lose. So if you have I don't know, a 50% win rate, you're going to lose one of every two trades, and you're obviously going to be looking for a better risk to reward than one to make money. If you have a strike rate of 70, 75%, perhaps you're only looking for a one risk reward, but you know you're going to lose 25% of your trades. Okay, so with this trade, I'm just letting it run. 6751.3 is where I will exit for a loss if the market pops up there. I'm not making any decisions until the market reaches my management point. So if it doesn't reach the management point, it will stop me out for a loss. It's only after it reaches these levels that I want to start managing the trade. Okay, so what I'm going to do is I'll likely pause the video, cut it down as always. I used to just let the trade run for the full duration, and you ended up with 10 minutes of complete silence, videos that were an hour long. So I will pause the video, I will cut it down, I'll only turn it back on if the market starts to move down toward the management point, or if it comes up towards the stop when I'm being stopped out. And then after that, I will turn the video on whenever I'm making decisions, whenever I'm analyzing the markets, I'm considering exiting the trade or remaining in the trade. Okay, so the market has came down into this management point. You can actually see it's reacted off of it already a little bit. It's just essentially an area where you would expect buyers to step back into the market. So now that the trade has reached this level, this is where I begin to manage what I'm doing. So I'm basically watching the candles, watching how they form, watching how they complete, and making decisions on the trade based on what the price action is telling me. I'm still looking for a target down toward these levels right here. So basically, let's have a look. 11.7 point stop. I'm looking for, around about 13 to 14 points from the trade. So just better than 1-to-1 risk reward. But it all comes down to what I start to see at these levels now. So very, very minor reactions at this level thus far. More than happy to stay in this trade at present. I'm still looking to take it down into these levels down here. Okay, so the market has reacted at 11.05 to the management point. This is basically what I was looking for. See if the market was going to spike up like this very, very strongly. Now I'm just watching this candle. I'm going to watch how it reacts, how it closes, and potentially I will exit this trade. Okay, so we've had a doji candle right here, and then we have had another strong candle right here with the high at 45.6. So basically 46.6 now. I will exit this trade for a loss. Okay, so I am now out of that trade. Round about 7-point loss, which is around about 0.5%. The reason for the trade, as mentioned, I got short after this candle right here with a management point down here. As the market came down, wasn't really going anywhere, wasn't really showing any bullish strength until this candle right here. After this candle, I wanted to see another strong candle to get me out. We got a doji right here, and then we got this candle here. Exited as the market broke above the high of this candle. So there we go. As I said at the start of the video, losses are all part of trading. I'm well aware that I haven't posted a losing trade video for quite some time. Basically, the videos just come um, with the trades that I take. So on the Tuesday, I do the review of the Ftse. You get whatever trade I take on the Ftse. On the Thursday, I trade the Australian dollar, US dollar with the review video, and you get whatever trade comes with that market. You can't help losing trades. There's just no possible way to do it. It's really, really important that you understand that. Even people who say or think they understand it, I often find that when it comes down to it, they aren't able to accept the losses. So no matter how many times I like drill it into people's heads that you're going to lose trades, as long as you're following your trading plan, as long as nothing is, as long as you're not having any faults, basically, as long as you're not making big mistakes and those are where the losses are coming from, it's just part of trading. What I tend to find is that a lot of people who come to me, they're at a very bad stage, and it's usually because they have watched lots of videos by traders showing winning trades. Um, I'm sure you know the videos I'm talking about. The videos that say you can grow your account by this many 100%, and then these people get into it and they throw a lot of money at it, and then they suffer the losses. And when they come to me, they're a lot of the time they are quite broken. They've lost a lot of money, and one of the things I need to stress is that it's so important to learn how to deal with losses. Um, it's all part of it. It's all part of the big game that is trading. As you can see, I got the signal to exit. I exited early and took a 0.5% loss rather than a full 1% loss. That's part of trading as well. Being able to come out of a trade. I'm sure you see or you've read, cut your losses early. That's exactly what it's talking about. My trading plan tells me that after the management point here, if I see the strong reactions, if there's reasons to get out of the trade, get out of the trade. I got out of the trade here. It saved me 0.5% on the day. And those 0.5%, they add up over the week and the month and the year. Okay, guys, so there you go. Losing trades, 0.5% loss. As always, I will always post the trades that I take. I will always, give it to you as straight as I can. So hopefully that was helpful. I'm James Orr, and thank you.